Welcome to another episode of Around the Grounds with the Property Baron. I'm Jason Barron, and each week I'm joined by Nick Meredith, our Brisbane partner, and Hugo Fonseca, who's leading the Property Baron Invest. This is where we'll catch up, share what's going on around the grounds from Brisbane right through to the Sunshine Coast, and what's happening in the investment space. No headlines, no hype, just real conversations, real insights, and what's actually happening on the ground in the property market. And so let's go around the grounds. Good morning, Nick and Hugo.
Morning, Jace.
Morning.
How are we?
Yeah, we're good. Friday, normal busy day prepping for the Saturday inspections, and we've got a bit on at the moment, so no quiet days.
Very good. Lots happening. Lots of headlines happening this week. So interested to get your thoughts on things. The biggest conversation topic that I'm finding at the moment is, particularly with agents and anyone else in the industry, is the war in Iran. What's going to happen? Prices of fuel going through the roof. We touched on it last week, but it's such a big thing that I think we should probably have a bit of a chat about it this week as well, and how the war is going to be impacting general living expenses, the wider economy in general, and other things that have a flow-on effect on the property market. What are you guys seeing out there at the moment?
I think it's interesting, isn't it, how things have quickly changed in the space of probably a fortnight. Just talking to selling agents and engaging just based on their actions, even you can see that it's definitely slowed down and it's a lot quieter out there, both on the buyer side and the selling side as well. The feedback I'm getting is that there's a lot of people sitting on the sidelines at the moment due to the uncertainty, thinking about what the next step is and what may or may not be coming. And so there's less listings coming on. Yes, there may be some decrease in buyers, but I think the activity has decreased more on the selling side than it has on the buyer side. Now, from an investment point of view, that's still positive. What it also does is it's helping us have the upper hand in a lot of cases in terms of negotiation, etc. And we can see that with the agents working a lot closer with us and wanting to help make sure that it's a win-win situation for both the buyer and the seller, but at times having to help educate around price expectations for the sellers at the moment in particular.
Yeah, I think you're right. I think it's definitely going to be impacting the selling side of things with the lack of confidence of people bringing their house to market. The most common question I've had this week from people that I'm dealing with is, what do I think is going to happen with everything that's going on? And I'm sure you guys are the same. What are you finding out there, Nick, with relations?
Yeah, a lot of uncertainty. I think that's the main thing. Even experienced agents are, well, they're not uncertain. They think there's going to be a little bit of a period where the market's a bit unsure of itself. The good agents have got their runs on the board, so they're not overly concerned. They know they'll find their way through it. They've been through these cycles, ups and downs before. They're certainly prepared. While there is uncertainty, certainly in Brisbane, there's no shortage of buyers still out and about. Particularly, as I say, most weeks that entry level market is still seems to be as strong as ever. There doesn't seem to be any shortage there. Probably the really good part of the market or accessible part of the market for buyers at the moment is that mid-range, particularly $2-3 million. I know that sounds like it is a lot of money, but there's definitely some good opportunities in that range for people. A lot of these properties are way below replacement cost. So some really good opportunities for buyers in that part of the market.
I think we've been looking at that across the board for quite some time now. Replacement costs of a property or buying something established, and if you look to just buy the block of land and build a house, it works out way more cost effective to buy the property already built. We noticed that quite a bit. What else is happening in the investment space, Hugo?
Look, I think you just mentioned replacement costs, and last week you spoke about Warren Buffett's saying around the opportunity being, especially when people are fearful. And that is the case because when you think about it, you've got the increase in oil prices and petrol prices. We're already seeing that driving up the price of materials, impacting logistics as well. So we're already seeing builders tell us that they're being charged anywhere from 30 to 50% more for materials. That's going to obviously increase construction costs, which to your point around replacement costs, they're already high. The second part is at the same time, you've got rates increasing as well. So for developers that have to borrow to build as well, the feasibility may no longer be there. So we're going to have less construction starting, and whatever does get started is going to be done at a more expensive price. What does that do? Even less supply. We were already behind in supply prior to this. Once we come out of this, we're going to be even further behind, but the demand will return to previous levels as well. it is a tough time for everyone and for a lot of people nowadays. But if you think about it from purely an economical point of view, this is actually going to, from an investment point of view, put us in an even better position once this crisis is over at the end of the day.
And it's not just the investment space, it's the owner-occupier space as well. The more expensive things become, the less housing comes to market. It does impact all markets. Supply and demand is what underpins the property market and the values of things, and it's certainly going to impact on that. You come to just thinking about the topic that we've been talking about a lot this week with inflation. It's interesting when at the moment they're talking about this whole oil crisis and the war in Iran. It's going to be impacting our economy. And one of the things that they keep talking about is inflation increasing. They try and keep it around that 3%, but they're talking about inflation going up to 5%. And really, when it affects the property market, there's two things to, I guess, consider. One is interest rates going up. And if interest rates do go up from where they are, if they're about 6%, if inflation goes up, that'll directly impact interest rates and make it more expensive for people to hold a mortgage. That'll definitely help.
It impacts asset prices at the end of the day. If you look at inflation straight after COVID, same thing happened. We experienced higher inflation and increasing inflation as well as interest rates through that 23, 24 period from memory. And what did that do to asset prices? Everything went up as well. Similar is going to happen now, I think. The interesting part around inflation is prices never come back to what they were. The floor is established, and even when they do recede a bit and go back, they don't go back to where they started. So we're continuously building upon price increases that have happened with each of these crises in the past. We had a 40% increase in construction costs since COVID up to 2025. So we're starting from that floor and increasing it now. That's a reality people need to understand as well. So you definitely want to own assets in these times.
Did you guys see that that letter from Reece come out with an increase in their pricing for particular materials?
Yeah.
There was a particular polypipe type material, black plastic pipes, industrial stuff, and a couple of developers that I've been talking to, they've talked about them increasing by 30% with Reece straight away, but some other suppliers are increasing the big commercial pipes for a lot of the drainage that they put through to 50%, which is going to be huge. It's really going to eat into the builders' margins on things. Interesting to see where it ends up.
Are all those increases that you're hearing, Jason, are they all based on the fuel increases?
Oh, look, who knows where they come from? It's a petroleum-based product that I saw directly impacted by it. So maybe it's to do with how they make it. Maybe they're trying to increase the price of what they got on hand because they're not sure if they can get some more stuff in.
It just seems, look, I'm a bit of the opinion that a lot of the inflation that they're talking about now is being driven by fuel costs. And that's not really because people are spending more money because they've got disposable income or anything like that. It's just because this global event has happened and that's forced that up. So that's forcing everything else up. So I think there's a reasonable argument that at the moment the fuel should be taken out of the inflation we figure because it's just distorting the figure because it's something that's not being controlled by people spending. It's something that people have to do and it's being forced up by something that's not within our control. I just think it's a bit, I don't know, I just feel it's a little bit confusing for the average person now who's probably struggling and saying, well, hey, I'm not spending any more money. I haven't got this disposable income. Why is everything going up? And the simple fact is because there's a conflict on and that's forcing this up. So I think for a lot of people, they're finding it very confusing at the moment when they keep hearing about this inflation, but they look at their own lifestyle and think, well, I think I'm doing okay and I'm not really contributing. So how's it actually happening?
It poses a really big risk, Nick, of something called stagflation, where the economy just stagnates. Where the economy just stagnates, right? Because you've got inflation happening anyway, prices are increasing, but people just stop consuming and stop purchasing most things and cutting down on everything. So the economy just grinds to a halt at the end of the day. If there's no consumption, then obviously the flow-on effects into small businesses that all of a sudden are generating less revenue, then trickles back down into the economy where you might see layoffs and whatnot. And it's a vicious cycle at the end of the day. So that is definitely a risk that we're facing with this scenario.
Yeah, let's hope it's over sooner rather than later. We can just get back to where we were. Everything was seemingly going along reasonably well, particularly the property market was. So yeah, let's hope it's over sooner rather than later.
Yeah, I think I think we've spoken about this in a previous episode. At the end of the day, if it is stagflation or we do hit a recession, etc., what happens after that, or what happens when we do end up in a recession? Rates have to come down. Stimulus needs to be injected back into the economy. The government needs to, generate larger projects, create jobs, generate that improvement in consumer sentiment, etc. So once that happens again, then we have the same effect that we've had in the past, post-COVID, post-every crisis, where there's more liquidity, the demand comes back into the market, people feel more confident and more certain, and there'll be more sellers and more buyers, etc., and we'll be back to normal. But we'll be back to normal at a higher price point at the end of the day because of what has already happened with inflation and construction materials and construction costs, etc., etc.
There's a couple of interesting things happening at the moment. It's probably worth mentioning when it comes to all this kind of thing is that there's certain sections of the market out there. Obviously, every part of the market behaves differently, whether it's at the bottom or the top end or whatever it is. Investors have been going into some, I guess, second tier investment locations recently. And some of the prices of those investment locations have gone significantly in the last couple of years. And what we're looking at is we're looking at a mix between owner-occupier and investors in some of those markets. And they've gone from a predominantly owner-occupier market, a low price point, to all the investors coming in and changing it to a predominantly investor market, and to a point where prices might have gone up from 400,000 or 500,000 up to 800,000 in the last couple of years. So significant jumps. We've been looking at some of those markets, and because they're at the 700,000 to 800,000, the mix of investors is a lot more significant than the owner occupiers in the market. The locals in some of those markets can't actually afford to buy into those markets anymore. We've seen it, in over time back in the day in mining towns where they had boom and bust type scenarios. But some of these sort of second tier areas where they've still got good fundamentals of why you would live there, why you would invest there, with population density, numbers, different infrastructure projects, employment, bringing people to the area. We haven't really seen it in those types of areas. So if we do have a big increase in inflation, investors need to sell in those areas. It'll be interesting to see if some of those markets end up coming backwards more so than the more predominantly owner-occupier markets. Obviously, we try and buy in the owner-occupier markets as much as we can, but if those investors get to a point where their interest rates have gone up to 8, 9, 10%, they can't hold on to things, they're not going to have investors to buy back into those markets because other investors are not going to be able to afford it. So what comes next? They try and sell to the owner-occupiers. And based on some of those areas, the incomes are fairly low. The owner-occupiers might not be able to spend any more than $500,000 to buy them back from the investors. We haven't seen those massive uplifts in some of those sort of second-tier locations around the country for a long time or ever. So it'll be interesting to see how they pan out over time as inflation potentially gets a little bit out of control and starts to go up. In saying that, we always want to remember what inflation increase does to property prices. And when inflation increases, property prices increase. So if inflation goes up to 5 or 6%, which would be significantly more than where they want it to be, which is generally 3%, any asset will go up by that amount. So if $1 million property stays at the same value, it doesn't stay at $1 million, it goes up by inflation. So if the inflation is 5% and you buy a property for $1 million, in 12 months, that property will stay at the same value, but it'll increase by $50,000 because the dollar is becoming devalued over time. An interesting point to mention, because I think a lot of people out there, they probably hear inflation a lot. We talk about it a lot. We understand it. But a lot of people out there probably don't really understand it all that much. Best case in these situations when we do have a correction or some uncertainty in the market is that just remembering that property is a long-term investment. We buy something, we really want to hold it for 10 or 15 years. And when these crises happen, the idea is that you've got to try and hold on to it as much as you can. If inflation goes up and your interest rates increase, just remember that even if the property doesn't increase in value in real terms, it becomes worth more over time because inflation will push the price up. On to a more positive note. Noosa and the Sunshine Coast, what's happening up here? A similar thing with buyers and sellers, a bit of uncertainty in the market. Definitely speaking to agents and getting out and about. There's less buyers looking to buy. Everyone's a bit hesitant. I think the biggest thing this week for me through our market with our clients is just giving people the confidence to say, hey, look, we do have these times of uncertainty. They come, they go. If we buy well and we're holding on to the property for 10 to 15 years, whether it's an owner-occupier or an investment property, we should be all good. So let's get out there, see if there's some good opportunities for us to pick up, because that can also happen at the moment. Where you might have had 5 offers on a property before, 3, 4 weeks ago, you might have, one offer and 4 are hesitating. So be that offer, get that offer in and buy really well. And we might even have a little bit more of a bargaining power with the agents at the moment because all the other buyers that are in the market are hesitating as well. We've got Easter coming up, big time of the year in Noosa, Easter, Christmas, holidays. So no doubt there'll be a lot of people coming to the area. I was talking to a fairly big tourism operator who manages some properties between Sunshine Beach and Peregian Beach, and he was saying that his bookings are really good. They've been up for a while. And let's hope they all continue through and actually end up staying here. If they do all come here, it's going to be a good sign for the area. Brings money to the area, which is great. What happens in Noosa over the Christmas or holiday periods? And generally, there is a fair bit of activity. Activity increases. A lot of people attend the open homes. It doesn't always turn into sales volumes. If it's a really positive, buoyant market and there's a lot of competition in the market through Noosa, if we have an Easter or a Christmas, generally there is an uplift in activity and sales volumes. If it's a normal market through Noosa, there'll be a lot of volume, a lot of activity with open homes, people going out and inspecting things, but it doesn't always turn into transactions and sales volumes. Last Christmas was a bit like that. There's a lot of volume in terms of the open homes, but it didn't turn into sales volumes. So Easter this year will be interesting with the uncertainty in the market. There's a really good chance that there'll be a lot of people inspecting and thinking about, dreaming about living in Noosa, but possibly not as many transactions happening as what there could be in a market that's a bit more sort of positive, a bit more competitive. One of the big agencies in Noosa, actually, I won't name names, they've got a policy that all their salespeople need to be working through the holiday periods. That'll be the same. So it'll be interesting to see what happens during Easter this year up here. What else is happening down there in Brizzy, Nick?
Yeah, look, Brisbane's much the same. We're seeing, look, I don't think we'll get obviously the holiday crowds that we'll get, but we'll still have, a lot of people out and about. There'll be good open homes on the Easter Saturday. That'll still be up and running. Most of the agents will still be working. I think the good agents are really working hard at the moment, and they're the ones that are going to really show the benefits when we come out the other side of perhaps a little bit of almost a pause down here. But the ones that I know that I think are, the premium agents, they're working super hard. When you see the work that they go through, you understand why they're successful. So they won't stop because there's an Easter break. They'll see a good opportunity to put the hard yards in then, and then they'll be ready to go post that. Does seem to be a little bit more stock coming available, particularly in the unit market. If you've got a good unit budget and you want to buy a premium unit, there's some fantastic stuff out there at the moment, and there seems to be more and more of it coming on. By that I mean sort of $2 million plus units. There's some really great opportunities in Brisbane at the moment. Premium locations, really good little hubs near the city, on the river. There's just some fantastic opportunities. It'll be interesting to see how that plays out over the next couple of months, just how many transactions there are on those sort of properties, because they're really they're pretty unique, some of the ones that are out there. So it'll be interesting to see how they go.
Yeah. Another point to mention is I'm listening to a lot of sales agents talking about educating their vendors. So a lot of sales agents, like you said, Nick, are really good and they've been around for a long time. They understand what they've got to do in these markets. If the sales agents are educating the vendors of what's happening, if you don't accept, the offer that's on the table at the moment, you might not get another opportunity like that. The more they have those conversations, the more activity is going to happen in the market. The better we're going to all weather the storm through the process, I think. What about your investment space?
Mate, I think we've covered that all off. I think the key message really is that at the end of the day, there's no crisis that lasts forever. Right? There's been plenty in our history, and we get through them.
Mm-hmm.
For sure. Well, that's about it from us. Thanks to everyone for listening. Don't forget to follow the podcast Around the Grounds, and we'll see you next week.